first of all, I'll talk about what is liquidity. Okay, and this is what liquidity is. Now, liquidity is actually a point. Okay, liquidity is actually a point in the market that is seen as equal highs, equal lows, trend lines, etc. Now, what I mean as equal highs, equal lows is this. When you see something like this, in smart money concepts, this is called liquidity. And we normally use the arrow to mark out stuff like this. There is liquidity found here in this structure above the highs. Now, this is exactly what retail traders call resistance, right? That is why I normally tell people that retail trading and smart money cannot be interchanged. Like, how will I put it? You can't mix the both of them. Why do I say you can't mix the both of them? Because there are some concepts in retail trading that conflict some concepts in smart money. Example, this. In retail trading, it is said that this is a resistance. So whenever something like this happens, you must wait for a retest resistance level before you take a buy. You know that, right?
Yes.
Yeah, that's beautiful. You go on YouTube, you see concept like that. That is retail kind of trading. Yes, that says break, call it break and retest. For smart money, what do? Do we trade something like this? No. Why don't we trade something like this? This is because we see here as liquidity point. Liquidity point is actually that point that there is enough stop losses above and beneath. Now, there are so much stop losses here, and what do you see smart money people do? After marking it out, we put up a star like this, right? An X rather, that shows that this is a danger zone. Check my chart, you see stuff like that on my chart. This is a danger zone. The danger zone in the sense that many people are doing this. Many people want to do this. Many retail traders are doing this. They are selling and they are putting their stop losses on top. Right? Highest thing you can see is 20 pips on top, right? People enough with, hold on, let me take something. All right, so many of them will have to put their entry right here and put their stop losses above. And most of their stop losses are, I think, 20 pips, 10 pips, 15 pips, understand, above resistance level. So who are smart money? Don't be confused. Smart money are not we, the smart money traders. Smart money are the market makers, right? Those people that actually determine where the market will go. While you're sleeping during the Asian session, the London session, whatever is going to happen in the London session has been printed, like it's been already mapped out what will happen. So they know that people are actually looking to take shots here. Like there are people that are looking to take shots here, and those are novice traders to take shots here. So what they do is that when they come here, they pretend for a while like this, then they move up. Right? So they come here, they must make sure they pretend like I think it's respected, and then they move up with speed to clear out everybody. Right? To clear out everybody. They make sure they move up with speed to clear out everybody. So that means there's stop loss here. So now because there's stop loss here, smart money traders will never be found selling in a point like this. If you sell in a point like this, then you're trying to trade double tops and double bottoms and all of that stuff. And guess what? You will get clapped. Now, what do some retail traders are a little bit smarter, do stuff like this. They want to see a pullback to at least the neckline or something like this. Let me make this better. Yeah, they want to see a good pullback maybe to this level, and they will now draw their rectangle to mark here as a support, right? To mark here as a support. So what do they want to see? They want to see something like this. So this level, I call it support turn resistance, and they want to see a push like this, right? So what are they doing? They are selling right here. and their stops what are above here. This is pure retail concept. But what do smart money do? Smart money and the banks, they know very well that this is what many traders want to do. So they do why you get 90% of people lose money while trading. Just what smack everybody and go up. So we that are smart money traders, we are here to actually catch the footprints of the bank.
Hello, can you hear me?
They are up to catch what they are up to. So in a scenario like this, we are not going to sell. Instead, a smart money trader will look for something like this. Instead, a smart money trader will look for a setup like this, right? They'll look for maybe an order block or a point of interest to be found alongside here where they want to take a buy from here, and their stops was below, and their aim is exactly this high. Instead of them to sell, they look for buys to aim this high. Why are they doing this? It's exactly the opposite. They are trading against the retail traders. Retail traders want to sell their way out of, as in to sell their way, while smart money want to buy their way up, because this is where the banks are targeting. They are here to play around, lure enough people in, and then drag all of them up and hit their stop loss very well. And once they are at this point, this is how more retail traders will lose. More retail traders will be like, okay, we have broken the highs, so let us what trade breakouts. There are people that trade what they call breakout strategies. Be like, okay, fine, I'm trading this breakout now. Market has broken resistance, so let's start buying. It has broken here. And what do they see? Start seeing a rapid pullback. And guess what? They are scared. And why they see this pullback, they are still in these trades. Take notes. Let me draw it very well. Why they see this pullback, they are still in this trade. Take notes. There are those that trade break and retest strategies. They are also buying at this spot. Okay, they're also buying at this spot too. I'm going to draw another this here. So two set of people are in this trade buying. We bought here and we are out here. Remember, smart money bought here and we are out here because we know that this guy, smart money, wants to break these highs. We call it liquidity grab. Like the banks, they want to break these highs and then drive back in. It's their agenda. They want to do what? Break these highs and then most times drive back in. If they are going to go higher, they will drive back in and touch a POI around there before going up, but they won't go up from this place. No. Why? Because you know many people are buying here. They want to use their stop. They want to clear everybody. So those that are trading break and retest will be like, fine, here, right? Won't take their buys from here. So instead of seeing something like this, rather what they see price keep pushing down, will clear their stop losses. And now, most times, because of this impulse here, we have a POI, which is an IPA. POI is point of interest in smart money. It's an IPA. Maybe around there is a sell side inefficiency or buy side inefficiency. Sorry, a buy side inefficiency and sell side imbalance. So at this point, there's a gap in the candle. Remember when I talked to you about imbalances, something like this. Imbalance is actually a long candle that don't have any wick. It's just very long. Example, see how this candle is. Can you see that?
Yeah.
This green
Yes.
candle, can you see that it's very long without any just one candle move from this point to this point. So you see the whole space on this candle in smart money, it is called what? Imbalance. It's called imbalance. Why? Because at this point, price will eventually come back slowly to fit in this space. Price will come back slowly to fill in this space. It might not be today, it might not be tomorrow, but nobody knows when it will happen. But price must come to fill, meaning what I mean feel like price will come to cover it. Must cover. If you check on your chart, there is no such. Wait, just give me 1 minute. Right, so you can hear me. Right. So as I was saying, so if you check your chart, you will never ever see a candle with such space, like no wick around it. It's just long and price will not cover it. Example, this scenario you see here, because of this long move from up to down, maybe you just come and then you see price kept going down, and you don't see this slow move cover it. But if you check, it has been covered with this price action that happened here. Maybe you just see this long candle and then all these things that happen were happening down under the candle. You can't find that on the chart. It's impossible. Prices must come back and mitigate it, right? So that's what is happening in this scenario, right? In this scenario, that's what's happening. So after price push up that high to clear that high I marked. Sorry. What's happening? Okay, so after price has pulled up to clear this high, what we need to see is price coming back to clear this to cover this imbalance right here. Price must do that. But the retail traders, do they know? No, they don't know that there's anything like that. They want to see break and retest and then they buy. And price clear their stop loss, come here, and then price can start looking to go long from here again. So you don't start hearing there was manipulation on.
I can't see your screen.
Oh, sorry. Right. So at this point, you can't find any retail trader in this trade because they'll be like, okay, there was a manipulation in GU and all of that, and there was manipulation and they took us out. A good trader is supposed to spot the manipulation and take advantage of it or stay away from the market. If the manipulation is what you cannot get anything beneficial from, you stay away from the market. But if you can benefit from the manipulation, you make money from it, and that's only what smart money traders can achieve, right? So this kind of things happen wherever there's equal highs, right? We call it liquidity. Whenever there's equal highs,
Yes.
all of these shits happen again and again. These things happen again and again, and people keep falling for break and retest strategy. They keep falling for breakouts, trading breakouts, Fibonacci, and the rest. But this play normally happens at maybe London open, New York open, but it always happens when market opens. It's never happening, right? So after the market open, like maybe 8 o'clock GMT +1, that's West African time, and then that's New York, that's London session. You see GBP, JPY, or all these GBP pairs, they start doing things like that. They say it's manipulation. The price has gotten out of this range, and price got out, they want to buy. No, the price come back inside the range. No, it's manipulation, but that manipulation you can get advantage of it. So another kind of liquidity grab is the inverse of this, right? That's double bottoms, right? Call that double bottoms, right? But we smart money call it four lows, right? Four lows. So let me give you an example of that. Let's give you an example of that. So equal lows like this, like this, like this, right? That's called equal lows first, and you mark this with an arrow 2. Now, below here, smart money know that there are enough stop losses right here. So they will purposely want to push prices down to clear people's stop loss purposely. So when you see something like this, what you should be looking at, you should be looking for sell opportunities so that this should be taken out. If this is not taken out, I myself will not buy in a scenario like this. I must see this taken out before I buy. But most people do this. most people, what they do stuff like this, right? Break and retest and not start buying from here because this looks like a double bottom, which is kind of buy chart pattern, like a bullish chart pattern that give way for bulls,
Yes.
right? So what happens in this scenario? People want to buy like this. I once did this before, but this will fuck you up. Yeah, this will fuck you up. Why would this fuck you up? Because smart money has another agenda, right? Have another agenda, sorry. And that agenda is to clear these lows. Like they are very, very passionate, or I don't know how to put it, in taking out people, like hitting people stop losses. They know that so many stop losses are there, not to take out that low. So as a smart money trader, when you see a scenario like this, what do? You look for sell opportunities to take place. And once you get to this black arrow, make sure you're out of the trade. You're no more, because this is what's exactly going to happen. And that kind of liquidity again is trend line liquidity. And that's the most trickish because you need to see it because it happens every time. Every time. Every time, right? Trend line liquidity happens every time. And where do you see such thing? Most times you see price respecting a trend line this way, this way, this way. Now the smart money know that there are enough stop losses under the trend line because whenever price gets here, who would like to go long? So what would they do? They will do this. Deep, clear people stop losses, come back, do like it's a break and retest, and people that normally break and retest pump themselves here with cells and then they push up. I see. So they take out people how many times? 3 good times. They take out people trying to buy, take out people trying to sell the breakout, take out people trying to sell the break and retest. 3-way. When you get that 6.6 trillion US dollars circulate the forex market every day, people are donating that money and people are collecting that money. So
Our money, oh.
majority of the traders are donating. And if you're with systems that are very, very vulnerable like this to losses, you will make more losses, right, than wins. Right. So let me show you live scenarios where this happened, and not just live scenarios. What happened to their G and why your trade made sense, but I didn't get it, right? And since that's my strategy, I prefer to stay out of the market than look for money and get it. So this is what happened. This is GBP USD 4-hour time frame. Now looking at the 4-hour time frame, what do you see? I'm seeing a trend line liquidity right here. So price has touched here 1, 2, 3, 4. There's an X on top. So the next time price is coming, price is breaking it. You see this happen live, like happen today. It must happen today because you can see there's already 4 touches. Most times when price has done this 4 touches, breakout, like breakout. There's a very high possibility of this breaking out today. So I know that okay, fine, for me to see this, I'm bullish today. For the whole of today, I'm bullish. For me to see this on the 4-hour time frame. So I have to come down to something like 15 minutes to map out my Asian highs and lows. And I heard you saying stuff like, okay, it's difficult for you to mark out your Asian highs and lows, right? Fine. How do you mark out your Asian highs and lows? It's for you to kindly go to a time frame like 15 minutes. Now you use this your cursor, this your pointer. Make sure you put yours in the cross. They call it cross head tool. Make sure your pointer is in the cross tool, right? Then you take your cross tool. Check your cross tool. You see that on the horizontal axis, you are seeing the date and time, which is 3rd December.
Yes.
Can you see that? The
Yes.
horizontal axis below, look at below of my screen, you see a place highlighted black. See date in it. Can you see it?
Yes.
Very good. So now, if you move your cursor, this date changes and time changes too. So this thing is here to make you know that once you place your pointer on any candle, the date and the exact time when that candle was formed is represented below. Can you see it?
Yes.
Very good. So if you see this, you can be able to track Asian time and the London time. You know when Asian is opening, Asian session is opening, and when it's closing, and all of that. So first of all, you have to know your time sessions. When is Asian time session in Nigeria, and when is um, um, when is New York session in Nigeria, and all of that. So you have to know. So London session, I'm going to write all of this session in Nigerian time. London
Okay.
session, sorry. London session is what? London session begins with, hold on. Just give me 2 minutes. Let me just, please just give me 2 minutes. Let me get it.
Okay.
All right, thank you for your patience. I'm back. Okay.
Okay.
Yeah, good. So London session time in Nigeria is 8 p.m. Sorry, 8 a.m. till 5. Yeah, 5 p.m. London is open, right? Then we have New
Okay.
York time, New York session. Please, you can write this down or snap it. It's very important, right? New York session
Yeah.
is 2 p.m. till, I think, yeah, I think, yeah, this is it. 2 p.m. till 12 a.m. Then we have um, Asian
Asian.
session. Asian session is 10 p.m. till 9 a.m. the next day. Right? Do you see all of this? Now, if you check, there is crossover. So at this point, I'm going to indicate all the crossovers. Now, the crossover here in London session, there's a crossover between London and New York session, and that crossover is at, I'm going to write it as cross. Can you see that New York and London cross is 2 p.m. to 5 p.m., meaning as at 2 p.m., remember London session is still active. Do you understand? London session is from 8
Yes, I
to
understand.
5 p.m. Yes. But if at 2 p.m. in the day, it means London session has not yet closed. But that is the opening of New York session. So from 2 p.m. to 5 p.m., both London and New York session is open. So what do you see in the market? Very much volatility. Do you understand?
Yes, sir.
Because two sessions are open. That's why they call it cross. Now, between New York session and Asia session, there's also a cross, right? New York and
Yes.
Asian cross is when at the time from 10 p.m. till 12 a.m. morning next day. New York and Asia is on, right? And then there's a cross on.
Yes.
Good. Now, from Asian cross to London crosses. No, from Asia is next morning. So Asia,
Yes.
Asian and London, Asian and London cross. Asian and London cross happens at 8 a.m. Sorry, there's a mistake. Yeah, I think Asian session from 10 p.m. to 10 a.m. Yeah, Nigerian time. Then Asian and London cross is what? 8 a.m. to 10 a.m. So during the session, there's much volatility in pairs like GBP, JPY because it's comprising of both London currency and what Asian currency, which is Japanese yen. Do you understand?
Yes.
Good. So what you need to know is, first of all, London open. Forget about the cross. The cross can be in your head, right? But London session opening 8 a.m. to 5 p.m. New York, Asian. So just snap this, right? Very important. Good. So you can see them on the screen. So now, how do you implement this? How do you implement this in trading? Remember how I told you time and date shows below. So now I'm going to use my cursor to find when Asia session open. You can see, right? I'm going back. Now that's on 3rd December 2021. That was on a Friday. And that was last week Friday when market closed at 10 p.m. That's the opening of Asian session, right? Which means on Sunday, from Sunday 10 p.m., it resumes. Where it stopped that Friday 10 p.m. At Sunday 10 p.m., if you get to 10 p.m. on Sunday in Nigeria, price was your candlestick continues forming. What you have to target is the highest point formed during this Asian time. So from this candle, I marked 10 p.m. down here, right? I'm going to use rectangle to mark it out so I won't get confused. From this point, this rectangle active. Now, this rectangle is the Asian range. Asian session or Asian range, any of them, because during the Asian session, what happens is range. So now that's the beginning. I started from the box. Where is the ending? I'm going to end it at
10 a.m.
Exactly. So if you're in a scenario when 10 a.m. has not occurred, you're going to end it at that point where you are. Let's say we wake up every 7 a.m., right? 8 a.m., like we're looking at the market by then. So you drag that box to wherever you are as at then, where the candle has reached. So let me just say, I wake up at 7 a.m., I'm on charts. This is where I draw it and stop, right? So you have to look at the highest point of that range. What's the highest point? I see it.
Yes.
You use your arrow tool and draw out a horizontal arrow, draw it out long. And that's the Asian high. You can see their aim. Hello, are you there?
Hello, can you hear me?
I can hear you now.
I didn't get you. I didn't get you. Like, just go back like 10 seconds back. What you said.
Okay, I said You have to identify the highest point of the Asian range, which is here. So arrow 2, you draw it horizontally out, and you write up here like I did it. AH, Asian high. That's the meaning of AH.
Okay.
Now you identify the lowest point in the Asian range down here. Is AL, Asian low. As the lowest point made during the Asian range is here. Now you see the arrow here.
Okay.
Now, why I joined this arrow with this low is because here is the liquidity pool. Like I told you, equal lows here and here.
Yeah.
So me now, I was looking. If you check my screenshot on Telegram, let me show you. You check my screenshot on Telegram, see what I do. I do it that price will have to drop down, clear this liquidity, and start doing something like a Wyckoff schematic or a buy model, right? A market maker buy model. Like to start slowly forming a bullish move and then take out this trend line liquidity that is here and take out this Asian high. You understand?
Okay.
That was my plan for the trade. And trading demands that you plan your trade and trade your plan. That's what we call trading plan. It's very different from trading rules. So I have to see something I like, map it out the way I want to see it happen. If it doesn't happen that way, I stay off. I don't try to join because I see that okay, it's starting to buy from here. So that the markets are highly deceptive, you get clapped, right?
Okay.
Yeah, good. So at this moment, I was waiting to see a pullback to break this Asian low, but it didn't happen. So I started seeing price trying to do something bullish, and then I saw this opportunity. Find it on the 3 minutes. Why you bought? I don't really know why you bought, but if you were to buy this market, this is where you can buy this market. But me, I knew it to buy. Like I said, there's reason why it's going to buy on the 4-hour. I told you. We go to the 4-hour time frame. Number one reason why it's going to buy, I told you on the 4-hour time frame, I'm seeing trend line that has to be cleared. Can you see that trend line?
Yes.
Yes, good. It must be cleared. Then back to the 15-minute time frame, I came here to mark out my Asian highs and my Asian lows, and then I still found out that there is a trend line inside my Asian range, and that trend line has to be cleared out. And my Asian high now, if I may ask you, we just marked out our Asian high and Asian low. What is the reason for us marking this out? Why do we mark out Asian high and Asian low? Now listen, Asian high and Asian low serve as liquidity pools.
Okay.
Yeah, because you know that 3 types of liquidity. We have the trend line, we have double tops and double bottoms. We also have session liquidity pool like Asian high, Asian low, London high, London low. Do you understand?
Okay.
That's when we want to always push prices below any of them. Now, if markets was going to buy, most times this happened. If this was going to buy really good, price will have to pull back down, clear Asian low, and will spike up. But we are all learning. And today I just had to learn something from this push upward that whenever there is no order block or point of interest down where price will come to mitigate and go up, most times it won't clear the Asian low. Now, what I mean is this.
Okay.
Yes, what I mean is this. Let's say there must be something like this. For something like this to happen. Do you understand? So there must be something like this.
Yes.
Do you understand this now?
Other block.
Yes, good. And other block should be here, lying in wait for price towards clear the Asian lows. That will be a reason why I should clear the Asian lows and tap here and then clear both trend line liquidity at the same time, clear the Asian high. But that was what I was waiting for. So because this did not happen, like price did not clear the Asian low first, I didn't want to do anything because that has invalidated my trading plan. And me trying to trade anything else outside my trading plan, then I am trying to do things because of money. And if you trade forex because of money, trust me, you lose even more money. So the thing is that you should trade your plan and always make sure your risk is kept very small. Like if you check your account, like I'm taking things really small and slowly. One big win on that account is going to clear out everything and make people more. And that's the big win we're waiting for, right?
True.
So yeah, so this is how it is. So this is your trend line that has just been cleared. Asian high has been cleared. So you've seen it live that liquidity must be cleared. Instead of what will retail traders be buying here? What would they be doing? They'll be selling here. Why? There's a trend line here. So they'll be like, okay, price got here, it's sold off. Now it has gotten here, it's sold off again. Trying to pull back to get here and sell off. How long will that thing keep respecting? Right? Good. So at this point, price broke out from here and cleared people's stop losses. And at this point, so many sellers will be waiting to sell this here. And what happened? Price broke it very, very fast. And now price doesn't want to come back. And trust me, anything that makes price come back here, instead of me trying to buy based on break and returns, instead I will look for sell opportunities, feeling that the price is now ready to come and clear here.
Okay. Can I ask something?
Yeah, you can ask.
The thing now, is it that the highest points the Asian session makes, is it possible, or is it must that the London session will have to respect it and keep going high from there, or will it clear it?
Now, like I said, whenever we are sleeping during the Asian time, Nigeria, whatever will happen in the London session is already planned, it's pre-planned. So they know what they are doing. So it is a must that either of these sites are cleared up. It's a must that is either the Asian high or Asian low. One of them must be cleared. And also, 40% of the time, the both of them is cleared. Do you understand?
Okay, let me put it this way. The Asian high.
Yeah.
Can you hear me?
I hear you.
The Asian high, will it be the lowest, will it be the London low?
No.
Is it the lowest the London will go?
No, it's not like that. No, it's not like that. These things, every day is different,
Okay.
right? Every day is different. When it clears a lot, it depends. For instance, if GBP USD is going to be bullish today, they already determined it. So what it will do is that it will either clear the Asian low first, then keep going up. And trust me, as it's going up, is it not the Asian high is going to clear and keep going up? Yes. So now, whatever happened in the London session, trying to determine London high or London low, has nothing to do with Asian high and Asian low. The Asian high and Asian low is marked so that price, we ourselves, when we're marking it out, we know where price has cleared. So I can know when to enter and when to get out. It has nothing to do with Asian high and London. As for me, I don't mark London high and low. The reason is because I do not trade currency at New York session. So once it's New York session, I'm not looking at currency, I'm looking at US 30. So on US 30, that's when I start marking London high and London low. And I'm not marking Asian high and Asian low again on US 30. Sometimes I just mark out the range, like this Asian range. But I focus on the London high and London low on US 30 because it's always happened like the last session before the session you are now. Price will want to take out either the up or down. So you need to be focused to know where price is going for the day. Then make sure you do not buy, maybe see how this other block is now. Price, even if price came to this other block that's down here, I will never ever buy. Because I know that below is the liquidity. And it's very easy for price to go deeper. So I will not buy. But first of all, if price want to buy, price will not come to this other block and start buying. That price will stay where it is and start buying, or to come and clear this thing down and start buying. Because I'm telling you, one touch, two touch, why do you think price will come here again and touch and go up? Why? There must be a breakthrough. Even if it's not very long but short, there must be a breakthrough before it go up. All right, that's the algorithm we're talking about here. So do you understand?
Yes.
Okay, no problem. as you keep trading, you keep getting used to this pattern of trading and all of that, right? Good. So here we go. So why you missed your trade is because the kind of trade you were supposed to take, you're supposed to take a buy from that point to take your buy from. If it were me, I was to take this buy, which I saw it while I said, okay, I don't want to do anything outside my trading plan. I would have come to the 3 minutes time frame and identify a point of interest, which is this other block. And I could have seen it was mitigated very well, right? And I would have aimed these highs and put my stop loss below. You can see a very small stop loss, 4 pips stop loss, right? Are you seeing that? And you would have won this trade. Check it on the 5 or 15 minutes time frame. You wouldn't see why the person took. Are you seeing?
Yes.
You won't see any reason why the person took the trade. You'll be like, wow, this was where your point of interest was around here. But price didn't get there because there was nothing to come and mitigate. There was nothing. Right? There was nothing to mitigate. Right? If you're looking at like an imbalance here to come and mitigate, price will not come here like this session. Price should have come this session, but if price was coming down, price came down even to this level. And we ignore this imbalance because then price is not going to kick off from here. Why? Liquidity is down. Liquidity is more stronger than imbalances. It's the major thing that makes price. Yes. Liquidity, you should always watch out for it. You can watch out for liquidity very well, and you see that your win rate will increase. Okay. Imbalances, because imbalances will get covered, but it must not be now. Like it might get covered tomorrow, next week, anytime. But it's not like urgent. What gets urgent to clear is
I get your point, Sam.
So this was where you would have taken your trade from the time frame right after you see price trying to do a what they call this is a buy, a market maker buy model. You seen a bearish move, then came to the dip, formed a dip, right? Did first retest, go up, second retest, went up, created an order block, right? At this moment, you can now like, okay, price wants to go up. It's not looking bearish. It has broken structure. You can see break of structure happen here. You know how to mark up break of structure, don't you? Yeah, the break of structure happened there. So after this break of structure has happened, you can feel like, okay, I'm drawing my order block here and the price stops in here, I may risk it, and then I'm getting out at this level. Because you know that price, this is where it's evident, this liquidity clear it. For me, I normally put my take profit at the liquidity, the resistance point. I don't put it away. I know that it will break it, but I normally put it because sometimes anything can happen, right? To make a very precise setup and targets. Fine. Now this is a 4 pip stop loss. It depends on you to do your calculation for your risk management and risk maybe 1 to 2% of your account, and then you win the trade. That is a 1:3 risk to reward. If you're risking $2, you're making $6. You're risking $10, you're making $30. 1:3, very good trade. So hope you understand.
Yes, but okay, the thing is, I just noticed that I could go down to the 3-minute time frame to check my entry point. Because me, I start my analysis from the 4-hour time frame, then I stop analysis at the 30-hour, sometimes 15-minute time frame to mark out my imbalances and my other blocks.
Okay, so me too. Before I do stop at the 15 minutes time frame, I don't go below that. But right now, I move to even the 1 minute time frame. Get me? We're learning every day. So the more you trade, the more you refine your strategy, the more you modify it, make it better. I look at the 1 minute because many of these heavy moves you see are triggered on the smaller time frame that you cannot see on the big time frame. Trust me, you're looking at the 1 hour time frame, you will not know why these things are buying just like that. Right? You might see something like this, but it already happened. You see a black candle and a green engulfing candle that has a wick on it. It doesn't look like an order block to you, does it?
No, it doesn't.
Good. So you never think of taking this trade here. I feel like, okay, it's not shadow, but you see the next candle, how long it is. But on the 3 minutes time frame, it's very clear why trade buying. You can see very clean and clear trade. When construction happens, tap in the week and then fly. Simple. Understood?
Yes, yes, sir.
So now you've understood the liquidity grab, right? You've understood the Asian, how to draw your Asian
Yes.
rate, right?
Yes, yes.
Okay. So let me get back to work. Right.
Thank you very much, sir.
No problem. Welcome.
Okay, thank you. Yeah, thank you.